Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look again in the euro currency. So today we mostly will focus on the fundamental points of the current situation, because on the technical picture we actually do not have something really interesting. Yesterday it was a bit tricky price action, but actually it was totally based on the statement that Mr. Draghi provided. So in two words speaking, European Central Bank hasn't cut the facility loan rate from the 25 points to the 15 points. No rate cut has followed, and market actually has priced in more than 50% that this rate will be decreased. Second, Draghi said that there will be no growth probably on an economy on the second half of the year, but at the same time he doesn't see any signs of the recession. And when he was asked about whether some measures on the quantitative easing program stands on the table and what degree it will be, what volumes it will be. If you remember, when the quantitative easing was taken in the European Union, the European Central Bank was buying back their bonds, government bonds, from the market and put liquidity in the markets. He said that no discussion was on this subject. It means that this discussion probably will follow in the next meeting that will be in September. As a result, Draghi said nothing new and no particular measures have been taken on a European Central Bank policy. So no rate cut, no some new vision of the situation. Mostly everything is the same. There's no important information on the quantitative easing, probable quantitative easing measures. So actually nothing. As a result, you can see on the chart this high wave pattern that indicates in the decision. So what does it mean? It means that market was not able to cut to catch the direction on the European Central Bank statement. It just shown the reaction on some points that Draghi have announced, but as nothing definite have been said, market hasn't shown any direction. So it dropped lower, hasn't quite reached the OP and stops at 111 even approximately. Jump up back to the 50% retracement of the whole downward action, and then stands flat in the middle. It means that in the current situation, in the nearest term perspective, everything will depend on the United States statistics and Fed policy. Speaking on the statistics, yesterday it's also good statistics on good orders in the United States, so they have increased. The initial claims have dropped. So in general, I would say that statistics in the last period, in a few months or even in this year, is not bad. So I'm talking about it in every weekly report. And my suggestion is that currently Fed has no real reasons to start some dovish rate cutting cycle. I would suggest that this will be just single rate cut to calm down the markets and to satisfy the markets. When the rate will be cut, Fed could turn policy in the vector that it needs. And at the same time, this will be not too much scream on the markets that Fed takes unpredictable measures, doesn't correspond to the real economy situation. So with this rate cut, this will be just a compromise that will let to satisfy the market to calm down them, and at the same time it led the Fed to follow its own strategy to provide new vision on the economy perspective, to provide some additional information that could be different from the situation that markets see. Also, I suppose that the gross domestic product data should be positive So this is my view. Although I'm not trade the statistics releases, and if you are trading it, do not treat this information as the signal for taking the long position in the United States dollar. This is just my view on the expectation on the gross domestic product release. Second, I suppose that this will be just single rate cut of the 25 points, not the 50 points, and no diverse cycle will start. That theoretically should support the United States dollar, because currently still some degree of the pricing in of the more diverse measures stands on the market. So still some expectation exists that maybe it will be a diverse cycle, maybe it will be not 25 points but 50 points cut. This probability is not really very significant of that, but at some level these events also priced in on the market. That's why I suppose that euro could proceed downward action here. Besides, if you'll take a look on the dollar index, you'll see here there's more bullish signs on the market. So this is 4-hour time frame chart. Let's take a look. After the twisting and turning yesterday, as you can see, the lower shadows are greater than the upper shadows, and here market is standing higher currently. So here the picture is not as equilibrium as on the euro currency. This still stands closer to the upper direction. On the euro, it means that market stands somewhere in this area. So taking the parallel view on the dollar index, so on the dollar index the price stands close to the lower bottom if we will transpose the situation on the euro. So and it's considered tending higher. So that's just indicates our suggestion that probably these steps could follow. So OP target on the dollar index stands around 98. On the euro currency, it's much closer, so market stands close to the targets. OP is 1060, 1070 area. So that's what we see currently on the euro. On the technical situation, it's of course the high wave pattern. So as usual, the breakout of the high wave will point you the direction. So if market will drop below the lows, downward action will continue. If market will take out upper extreme points, stop, this upward action will follow. On the 4-hour time frame chart, nothing really interesting. So market is calling around our butterfly target, hitting the COP, shows this volatility around. On the hourly chart, it's the same thing. So lots of volatility. Market shows 50% retracement with this upward direction. Here, maybe if you trade on a very short-term scale, you could try to catch maybe guardrails triple to buy, guardrails triple to sell, something, some minor patterns. Maybe you will be able to catch, but a few hours until the gross domestic product release today, guys, hardly some volatility and activity will be prior this data, and we will see everything when the data will be released, and I suppose that hardly we will get any real valuable opportunity to take the interesting trade until the gross domestic product will be released. But as I said, my personal opinion and suggestion that chances on a downward continuation looks a bit more probable in the current situation. So, but we will see what will happen.